Good morning. That wasn't loud enough. So morning. Yeah. You see, that is the sign that you are in Dar es Salaam. Dar es Salaam means a port of peace. So just relax and enjoy the seminar. Dear organizers of this important forum, distinguished speakers, invited guests, and participants, ladies and gentlemen, again, a good morning. It is my pleasure to welcome you to the 9th Responsible Finance Forum, which Tanzania is honored and privileged to be a host. I'm aware that many of you have traveled from different countries within Africa and abroad just to participate in this forum. But also, I understand some of you, it is your first time in Tanzania. So welcome and enjoy the hospitality of our country. For those who have visited us before, you are welcome back again, hoping that the precious memory you carried away with you made you look forward to coming back again. For all the forum participants, it is my expectation that valuable outcomes will emerge from this event. Dear participants, reflecting on the theme of the forum, it dawned on me that a decade has passed since the 2008 global financial crisis. And ironically, that during the same time, during the same period, many will agree with me that it was the same period when the digital financial service revolution kick-started in Africa, and particularly in East Africa. The global financial crisis led to authorities and practitioners all over the world take measures in ensuring that the stability of financial systems is preserved in order to prevent future occurrences of critical issues that led to the crisis. Now, since that time, in one way or another, there has been a worldwide call for responsible financial practices. It is acknowledged that the era before the crisis, financial services were largely dominated by banking sector. Since then, it will only make sense to assume that important lessons learned a decade ago should be carried with us in strengthening the structures of the new digital financial service era. Ladies and gentlemen, the emergence of rapid evolution of digital financial services has seen an increasing number of non-financial service providers being the key players in the digital economy space. These services, characterized by innovation, have led the way in spreading financial inclusion to the mass population who previously could not access or use formal financial services. The digital financial services now are not only in form of person-to-person money transfers, but also used for utility payments, money transfer, merchant payment, tax remittances, mobile banking, and the now growing the digital credits. The ongoing growth in the digital economy, especially in Africa, comes with challenges to regulators to ensure that a proper balance between innovation and risk management is maintained. This is so as to ensure that an enabling environment is sustained to promote financial inclusion. Dear participants, in creating an enabling environment that promote financial inclusion, regulators and policymakers have to consider many aspects, including development of the appropriate legal instruments for regulations. Then policymakers and regulators are also tasked with spreading awareness to the public on the matters of financial education, as well as strengthening and enforcing consumers' protection framework. On their part, the financial service providers are required to develop products and services which uphold market ethics and consumers' protection principles. Financial service providers are also tasked to sensitize consumers on their rights and responsibilities when they access and use financial services and products that are offered in the market. Now, for us in Tanzania, we have developed an enhanced legal and regulatory frameworks which has considered the promotion of financial inclusion in the country. And in doing so, we have enacted various legislations such as the Bank of Tanzania Act of 2006, the Banking and Financial Institution Act of 2006, the National Payment Act of 2015, the Electronic Transaction Act of 2015, and the Cybercrime Act of 2015. But further, the National Payment System Act of 2015 has a set of regulations which target regulation of digital financial service, namely the payment system and licensing approval regulations of 2015, but also the electronic money regulations of 2015. Now, these tools have been put in place to provide an environment to regulate financial sector with an overall objective of financial stability and deepening that I'm heading. Ladies and gentlemen, our experience in advancing financial inclusion in our country has shown us that continuous engagement and dialogue between regulators, financial service providers, as well as other stakeholders is of utmost importance to guarantee that key challenges faced by all stakeholders are addressed for a sustainable digital economy. Now, forums like these provide a unique opportunity for stakeholders to share views and learn from peers on new innovations and other developments in the financial sector. Considering that this forum gathers stakeholders from all over the world, it is my sincere belief that the outcome of the dialogue shall provide a meaning insight which reflects to the overall theme of responsible finance. I also believe that the takeaway of the forum will provide further awareness to the developing economy such as ours in carrying out another financial inclusion milestone. Distinguished participants, I would like to take this opportunity to acknowledge and appreciate the efforts of the organizing partners, including the IFC, Making Finance Work for Africa, the German International Cooperation Agency, GIZ, the CGAP, the UNCDF Better Than Cash Alliance, and the World Bank. The Responsible Finance Forum has become a global reference forum for financial inclusion from all walks of international community in the financial sector, and this is thanks to support from the German Ministry of Economic Cooperation and Development, BMZ, the Netherlands Ministry of Foreign Affairs, and the IFC. Now, as I conclude my remarks, it is my sincere hope that this forum will live up to its theme, that is, investing in responsible finance and innovation for Africa's digital economy. At the end of the day, we shall have with us solutions and new ideas to implement in our work. It is my hope that we shall continue to engage in charting the way forward for Africa's sustainable digital economy. I'm also aware that this kind of forum is happening for the first time in Africa. I therefore wish you fruitful participation and declare that the 9th Responsible Finance Forum is officially open. Thank you so much.
All right, we're going to need to hear a bit more applause for the Deputy Governor. Thank you very much. My name is Larry Meadow. I'm the BBC Africa Business Editor. I'm going to be your host for the rest of the day. And the Deputy Governor made an excellent point that it's been a decade now since the global financial crisis, and while the rest of the world's financial infrastructure was falling apart, Africa's was coming up, right? And that is when, as the Deputy Governor said, the digital financial services revolution began in Africa. So it's really great that the Responsible Finance Forum is in Africa for the first time. And this is the cradle of mankind, but also I think really the home of the digital financial services revolution. So thank you so much, Deputy Governor, for just such an excellent opening for that. One more time, a great round of applause for him. 3 people clapped. I think I should have gotten a better deal in my #RentACrowd. I'm going to need some of my money back. We're going to work on it. By the end of the day, all of you will be shouting and screaming like it's some kind of crusade. However, we'll get there. Don't worry. We have time. We have the whole day. For French speakers, we've got simultaneous translation gadgets at the back. So if you need some of that, please go ahead. I should say that in French, right? En français. Pour les francophones, il y a des casques de traduction simultanée à l'arrière. So if you need any help with that, please go and grab one of those. And hopefully you can enjoy the rest of the day's conversations. You're in Dar, so I should teach you at least one thing. We speak more than 200 languages in this region, but the one language that unites us is? Swahili. So in Tanzania, when you say what's up, you say mambo. Can you try that? I want you guys to... The Kenyans are saying poa. In Tanzania, they don't say that. They say freshie. So you should say, try that. Let me see how that rolls off your tongue. Mambo. And then you say freshie. Obviously, it's fresh, but in Swahili, you say freshie. It's a completely different word. Okay, great. Now that we've taught you Swahili, you're ready to become a Tanzanian citizen. Talk to the deputy governor. He can arrange for a passport. I'd like to invite the next speaker at the stage. Is a keynote from Natasha Benka. She is from the German Ministry for Economic Cooperation and Development. However, she could not join us, but she's kindly sent a representative. Please bring Judith to the stage. Where is Judith? She's right there. Please give her a big round of applause.
So, distinguished guests, dear ladies and gentlemen, on behalf of Natasha Beinker, the G20 Global Partnerships for Financial Inclusion's co-chair from the German Ministry for Economic Cooperation and Development, the BMZ, who highly regrets for being not able to be here today, I would like to welcome you and thank you all for your participation in the Regional Responsible Finance Forum 2018. Since its initiation, the Responsible Finance Forum has grown to an important element in shaping responsible finance ecosystems. This year is the 11th anniversary. The German Development Corporation initiated the concept back together with the International Finance Corporation in 2007 and supported the Responsible Finance Forum and technical input up until today. We are convinced that responsible finance is and will remain an important cornerstone in economic and financial development strategies and projects worldwide. After the previous Responsible Finance Forum was conducted on a global scale under the German G20 presidency in Berlin last year to discuss opportunities and risks in digital financial services, protecting consumer data and privacy, it is great that this year's forum has a strong regional focus on Africa, and as it was mentioned before, it's actually the first time for the Responsible Finance Forum to take place in Africa, and the first time to be implemented in cooperation with the Making Finance Work for Africa partnership. This is in line with the focus of the German government on the development partnership with Africa, for example, seen in the G20 Compact with Africa. And in addition to this year's forum, observing growing investments in the development of digital financial services, for example, through investments in fintechs globally, but also in Africa, the Responsible Finance Forum this year creates a timely opportunity to take view of development, challenges, and opportunities through the responsible finance lens. Since investments are key in the process of digital financial services development, the inclusion of the investor's perspective into our forum's discussion is crucial. The approach to engage with global and local stakeholders is highly appreciated by responsible finance forums supporters, the private sector partners, the regulators, the development organizations, partnerships such as the G20 Global Partnership for Financial Inclusion and the Making Finance Work for Africa partnership. The cooperation between the Responsible Finance Forum and the Global Partnership for Financial Inclusion has been fruitful. So the forum of last year on data protection in Berlin took place alongside the main GPFI events. And this, for example, demonstrated the bidirectional influence between both initiatives. And this year, the Argentinian presidency took up last year's Responsible Finance Forum's topic and produced concrete guidelines on financial consumer protection, financial literacy, and data protection, which were endorsed with the G20 GPFI policy guide in July this year. So although this year's Responsible Finance Forum does not take place alongside the Global Partnership for Financial Inclusion's events, it can be assured that the insights generated today will be carried out into the GPFI through its implementing partners, of which are some present here today as well. With the 9th Responsible Finance Forum, we continue to put an emphasis on some of the G20 high-level principles for digital financial inclusion and to continue to discuss our collective understanding of data-enabled digital financial services and of the industry that provides these services, as well as adequately designed and effectively implemented laws and rules to leverage the upside while managing the risks of digital financial services. Finally, the BMZ thanks all co-organizers of this 9th forum, including the International Finance Corporation, Making Finance Work for Africa, the Better Than Cash Alliance, the Consultative Group to Assist the Poor, GIZ, the United Nations Capital Development Fund, the Government of the Netherlands, the World Bank, and of course our Tanzanian hosts. It is because of your ongoing involvement and great commitment that we are all here today. So, on behalf of BMZ, please enjoy the discussions and be engaged and stay engaged. Thank you.
Thank you very much. Next on stage, please help me welcome Martin Holtman. He's the manager of digital finance and microfinance at the International Finance Corporation.
Mambo, everybody. Need to show that I can learn, no? All right. So I would have started with thanking everybody. Now we've had so many thanks to all the organizers, so I just want to add that I thank them too, and all the other sponsors. This is already an ongoing tradition, and it stays important, and we're very committed to it. Why are we so focused on the digitization of finance? We at the World Bank Group have made a big commitment together with our development partners to try to achieve universal financial access by 2020, which is 2 years from now. And without massive digitization, that will not happen, and it cannot happen. There still are huge gaps in access. Just to point out, women around the world have far less access to the financial system than men. Rural areas and especially agricultural producers have much less access than the urbanites. You just look when you walk around here in Dar, how many wakalas you see. I'm not sure there are that many in the rural areas. And all the major funders and investors are working on this. And that's one reason why the conference is here back-to-back with the MasterCard Forum, MasterCard Foundation Forum, which will happen over the next 2 years. Sorry, 2 days. It's been going on for many years, not 2 years. Africa has leapfrogged everybody else. Africa has the highest percentage of mobile money accounts in the world per capita, anything. And so in that sense, it's very, very pleasing to see how technology enables this leapfrogging to happen. And there is the first research coming out, at least out of Kenya now, around the M-Pesa ecosystem, that when well done, digital finance and access to digital finance can help reduce poverty, can help the most vulnerable people to do better in their daily lives, which is something we've always been tasked by in our case in the World Bank Group, by our owner governments to prove that digitization actually really helps poor people and helps the real sector. So we're getting the first evidence of that. And then, as every human being knows, and as we all know from the work of Carl Jung, famous psychotherapist, psychoanalyst, we all have a shadow side to our beings, light and shadow, and the digitization increasingly also shows shadow. When I was a youngster, as a professional, I was sent to look at the pricing structure of some microfinance programs in Latin America, and this was in the very early 1990s. And I called back to my principals and I said, we're actually in the organizations that I was looking at, the smallest loans and therefore the poorest customers were paying effective interest rates of more than 100% a year. And the reaction that I got immediately was, well, I cannot explain that to any, in this case, the assistance came from Germany, to any German taxpayer, that their taxes are being used to charge poor people more than 100% effective interest rate per year, and we immediately reduced interest rates by 40% the same day. This is 25 years ago. I discover a lot of very similar aspects of overpricing, overcharging in the new digital economy. In fact, just in this very country, I just heard that some of the effective monthly interest rates, once you add in all the fees, amount to 25% a month. Try to compound that for an annual interest rate. And as CGAP just published just last week in their blog, they did research in East Africa, and this was both supplier-side research and also demand-side research by doing phone interviews with customers. Many customers do take the loans for more than a month or more than a few days. In fact, many get stuck with the products that they have taken. And so I'm afraid there's lots of things that we need to think about and to worry about. 10% of Kenyans are blacklisted in the credit bureau right now, partly thanks to the availability of digital credit, of nano loans. Not so pretty aspects of what is, on the other hand, a rapidly evolving ecosystem. The genie is out of the bottle. It's not going to go back, right? The Supreme Court of India just stated that the Aadhaar system, which is the foundation of the India stack, which includes massive provision of digital finance, hundreds of millions of Indians have been able to get into the financial system through it, that this Aadhaar system is constitutional. It's not going to go back. And the Aadhaar is, of course, only the foundation of the India stack. It's the universal identification system that they use in India. Likewise, the digitization of finance in this part of the world or anywhere else is not going back. It's not going to be put back into the bottle. So the thing that we want to do about it is to make it useful for everybody and to make sure that our ethics of intent of what we all want to do with this, that is in the interest of the ultimate clients of digital finance. So during this conference, we will look at the role of investors, funders, and the private sector. This is happily one of those areas where private entrepreneurs and private enterprise are playing a very, very strong role. And we know, and we believe certainly at the IFC, that without strong private sector investment, most of the world's challenges of development are not going to get solved. So we will look at that. We will continue to talk about the first efforts that have happened around the guidelines for investments in responsible digital finance. There are actually several signatories to this declaration, and these guidelines are here in the room. The challenge now around this is going to be how to put more flesh on what is a set of general policy guidelines. So how do we ensure data privacy? How do we ensure cybersecurity, those kinds of things? I want to end by thanking again the Governor for helping us to start this off. Central banks play a huge role in this space because, of course, regulation is providing the foundation for all of this. And I'm also happy to say that, again, in this part of the world, the central banks and the governors of the central banks have been amazingly interested in this space and are the pioneers, I think, that most of the rest of the world can actually learn from. And we are deeply grateful to the other sponsors of this Responsible Finance Forum, the governments of Germany, the Netherlands, and of course the African Development Bank. So thank you very much, and I'm looking forward to a super interesting day. Asante sana.
Martin is like an advanced student of Swahili at this rate. He put in Mambo and Asante sana in the same speech. We're very impressed. And also Martin brought up the L word. Did you guys hear it? The L word. Silence. Did you guys hear anything he said at all? Leapfrogging. Right, that's the one I was referring to. We'll come back to that a little later. Right now, though, the last keynote before we go into the panels is from David Ashagbor. He's the coordinator for Making Finance Work for Africa Partnership at the African Development Bank. Please, a big round of applause for him.
Good morning, everybody. One of the advantages of speaking last is that everyone said everything you need to say, you wanted to say, so I'm going to be relatively quick. At Making Finance Work for Africa, we're very happy to be partnering with the IFC, BMZ, GIZ, Ministry of Foreign Affairs of the Netherlands, CGAP, UNCDF's Better Than Cash Alliance, and the World Bank for this first Africa-focused responsible finance forum. It is fitting that this year's RFF is focused on Africa, where some of the more radical changes in financial services are taking place, and where new products and delivery methods are enabling us to reach the financially excluded, the financially excluded and underserved. We are seeing e-money making inroads and becoming more accessible to a wider variety and becoming more accessible, and we are also seeing a wider variety of providers entering the markets. As has been said before, there are more registered mobile money accounts than bank accounts in a number of countries in Africa. And these services are these accounts are allowing people to extend beyond transactional use to include a broad array of services like credit, savings, insurance, and cross-border remittances. At Making Finance Work for Africa, the idea of promoting and enabling a proportionate legal and regulatory environment that protects the consumer and the financial sector on the one hand, and fosters innovation and competitive markets on the other, in line with the G20 high-level principles for digital financial inclusion, is central to our work. Both of these aspects are closely linked by the fundamental prerequisite of a well-functioning financial sector, which is trust. Building consumer trust is key for achieving sustainable uptake and active usage of digital financial services. As such, issues like protecting consumers from fraud, safeguarding personal data, ensuring transparency and the fair treatment of consumers are a top priority as new business and delivery models fundamentally change the way consumers access and use financial services, and therefore their interactions with the financial services industry. The most financially inclusive countries enjoy government and policy support, prioritize financial stability and integrity, and foster inclusion through a variety of products and outlets. We are seeing more and more regulators in Africa adopt a proportionate approach to regulation that fosters innovation and encourages dialogue with the private sector and evolves as market conditions change. However, as has been said before, government support alone is not sufficient to achieve financial inclusion. The expansion of financial inclusion increasingly relies on digital infrastructure, and this is one area in which Africa lags behind other regions. The fintech revolution is very much in progress and promises to extend the reach of financial services, lower costs, and speed up innovation. However, it also introduces new risks, and many countries still need to update their cybersecurity laws and develop their capacity to support data privacy protection. So all these are very important issues in achieving the goal of universal financial inclusion by 2020, as has been said before. And that is why we at Making Finance Work for Africa are so proud to be able to support this year's forum on the theme Investing in Responsible Finance and Innovation in Africa's Digital Economies. And to close, just to thank our partners. You've been thanked several times before, but I shall mention them one last time. IFC, BMZ, the Ministry of Foreign Affairs of the Netherlands, CGAP, UNCDF's Better Than Cash Alliance, and the World Bank for partnering with us on this initiative. And we look forward to a fruitful day of deliberations and to taking the conclusions forward. Thank you.
David, thank you very much. So we're going to go slightly deeper into this topic today with the first panel. We're talking about obviously investing in responsible finance, innovation for Africa's digital economies, which you have heard a lot about. But the whole purpose of this forum is to hear from some of the influential leaders who are transforming financial services across the continent. And I'm going to invite back Martin Holtman, who's going to be moderating this session on Africa's digital landscape, driving inclusion of the technology, the opportunities, and the risks there. And as Martin comes up, I'm also going to bring out his panel for that. The first is Grace Kyokunda, Chief Investment Officer at the African Development Bank. Please give them a big round of applause as they come up on the stage, like it is a concert. Anup Singh is the Domain Leader and Manager, Anglophone Africa for Banking and Financial Services at the Helix Institute and Microsave. Also on Martin's panel is Michael Nyaga, General Manager, Digital Lending and Equity Bank. And last but not least, Andrea Otina, COO of Access Bank, Tanzania.
All right, we have a great group of people who can help us put a little bit of flavor into the soup of digitization, and especially in this part of the world, which, as we said before, has become a leader. The L word is absolutely appropriate. Tanzania, Kenya, to a certain extent even Uganda have leapfrogged the rest of the world, but even I would say the rest of Africa in terms of digitization of finance. And so we're now going to talk a little bit about the issues that we discover. And just for those who didn't get it, because maybe it was a little fast, we have here Grace Kyokunda, who is Chief Financial Sector Development Officer at the African Development Bank, and I believe you're based in Nairobi, right? We have Anup Singh, who is a Principal for Banking and Financial Services at Microsave, an organization that I'm actually proud to report I also worked with many years ago, when digitization was actually not yet such a big topic. And then we have Michael Nyaga, who is with what is arguably the most famous financial institution in this part of the world that has been a leader in digitization, Equity Bank. And Michael is the General Manager of Digital Initiatives and Digital Lending, especially, and part of the senior management team of that bank. And then Andrea Otina he is actually the local guy here, because he has been operating as a Chief Operating Officer, a financial institution right here in this market, Access Bank. And I'm again proud to say that IFC is an investee in that bank. We are an investor both in the holding company and also at the local level. So welcome to all of you. I'm not going to stand in the way of you guys reporting back to us what you're all doing. So let us start with Anup, if you don't mind. Anup, if you could share a little bit with us how you would rate from the point of view of Microsave, how much progress has been made in this space of digitization, and what are some of the major risks that you observe in the market? Everybody is understandably very proud of the leapfrogging itself. What are some of the risks that you are observing, and what does that mean for practitioners here in the room on their product design moving forward?
Sure. So thank you so much for this opportunity. I think in terms of the progress that has been made in the digital financial services ecosystem and the evolution of digital finance in Africa, we have seen quite some progress. In fact, in some cases, Kenya can be considered as the absolute trailblazer, the front runner, the digital ambassador, with the models that were developed, be it M-Pesa, be it the MVNO Equitel that Equity Bank put together. I think some of the issues that we still see in the market is that eventually and gradually what we are seeing is the decline of microfinance banks. Very recently, there was a report that basically mentioned that out of 11 microfinance banks, 9 have posted losses for second consecutive year. And it is not to say that it is because they have not progressed on the path of digital transformation, or because the macroeconomic factors were not in the favor. It seems that there is an amalgamation of factors that is not working for the microfinance institution and microfinance banks in Kenya, and I'm sure that the same is going to happen in other countries as the digital evolution happens. Because what we are seeing is that if we have to put in one word the situation in African countries, most of the African countries, with respect to digital financial services, I think I will say that it is right now a hyper-competitive market. We are looking at banks that are significantly upskilling themselves to become a digitally transformed institution. We are seeing the emergence of fintechs. There are over 1,600 fintechs in Africa now, and every day there are about 100 to 200 fintechs that are being added. So much so that there are about 400 labs that are working in Africa, fintech hub labs that are working in Africa, and there are really good propositions, very local, very customized solutions coming out of these fintech hubs and labs, and we are also seeing some of these ideas really working and clicking in the market. So the hyper competition is a reality, and as it happens, I mean, we have to really think about what would be the future of the institutions that are so-called putting themselves towards the digital exclusion, or are adopting it in a very limited fashion. Just to break the myth, digital transformation is not just about including mobile money into your services. It's a factor where you have to think about your digital products and services. You have to think about the channel through which you are delivering services. You have to think about technology. You have to think about processes. And ultimately, you have to think about user experience. So, I mean, it's a full package. And just saying that we offer our services through mobile money is not the digital transformation. And that's something that most of the institutions have the misconception. And I think we need to support these institutions to understand it better. In terms of risk, as there are as the institutions move and progress towards becoming digitally transformed institution, we see that there is emergence of new risk over and above the risk that they manage currently. So there will be risks like technology failure risk, the cyber security risk. There will be risks like partnership risk. So you're partnering with a fintech, you're partnering with a service provider, and that service provider is unable to provide services on time, despite the fact that SLAs and incentives and disincentives in place exist. At the client level also, there is a significant increase in the number of risk as you are trying to outsource some of the core functions. So as you are moving from branches to the digital channel, there are issues like recourse management. Who is responsible if there is a grievance at the customer level? There are issues around pricing. I mean, to conclude right now, on the digital transformation, if I have to conclude, there are two key issues that I think I should open up, and this is very much in relation to the responsibility aspect. The first aspect is where when we say that we are a digitally transformed institution, the digitization, shouldn't it benefit the clients? We are still talking about 100 to 500 to 3,600% effective interest rate. So how is it benefiting the client? The second thing is that most of the institutions that I have been speaking to believe that there can be two models. There can be a low tech or high touch, or the other way around. Don't we think that there needs another model where there needs to be the right amount of tech and the right amount of human touch to be able to ensure that people who are illiterate, who are poor, who are oral, who do not have technology savviness and so on and so forth, they are able to then cross over and become from financially excluded or using bare minimum financial services to becoming financially included.
Excellent, thank you. So a perfect way to set the stage, and now let's move to one of the leading providers, Equity Bank, that has been at the forefront of digitization. Michael, maybe you tell us a little bit about what you are doing to transform digitally. How does the bank think about this? What are the areas that you have made the most progress with? And where do you see the risks and the pitfalls that might happen that Anoop just talked about, all the different types of risks in the partnerships, the providers, and so forth? And then if you might want to share with us a little bit your thinking on how do you balance the upside of, for instance, doing more accurate customer analytics through big data and all the access to data that you now have. How do you balance that with data protection and client protection? So those would be some of the areas that we would love to hear from you.
Okay. Thank you, Martin. Good morning, everyone. I think one of the things we've consciously made as a decision of the bank is to keep in touch with the customer. And if you look at the demographics of the region largely, the demographics stipulate that the average age of the country is below 20 years of age. And in keeping with that, then you have to understand this kind of generation is a generation that will always be digital in terms of the access. They're the generation that will not sit and watch TV. They already watch the news as it happened. And as that conscious decision, we made that we have to think beyond the brick and mortar structure for a scalable business. And in terms of what we've been able to do, we started off with the agency platform. We were among the first bank to create the agency platform where we decentralized cash-in, cash-out transaction into what we call an agency kind of relationships with partners and enterprises. And along the way, and part of the management of the risks that we do is to ensure that you also train capabilities that we have within the bank and within the group to ensure that they also, the same customer experience that you have, and in line with what you're talking about, customer data protection, is also enriched. Because a lot of things. Now, one of the things that we've also now realized that a lot of the transactions will always be done on the mobile. And today, the initiatives that we started to do is to think about the customer journey in terms of the products that they want and where they are. And a lot of our customers are within the rural setup. So we created what we have as an MVNO platform, the only MVNO first platform that we have in this region. And in the brand name that we call Equitel. And it is that 2G kind of a network capability that we are able to onboard financial services on the platform, on the scheme card. And to deal with the risks that are there is that to take advantage of all the securities that you can take advantage, you have to onboard it on the SIM card. And that's what we try to do. And volumes of transactions that we are doing on that platform today is about 800,000 transactions a day on that particular platform. And that helped us leapfrog quite a bit in terms of what we're able to do in terms of the cash-in, cash-out transactions. And also, it's not limited to P2P payments. It also P2B payments and also capabilities of all the financial transactions that the bank would have. So it's lending, it's insurance products, you want to check, you want to do Forex transactions, all those were onboarded on that. But as you went along and you realize that the economy today, 83% of penetration of internet is on the adults. People have smartphones, so you have to create another digital platform that we have apps right now. So an application that today also now beyond the Equitel platform, we also have the capability to have the app, which now is doing 900,000 transactions a day. Now, if you aggregate all those transactions, then we're saying 97% of our transactions today happen outside the brick and mortar tracks. And that's what has defined our digital transformation conversation along the way. And as we do all this, then you tend to capture a lot of data about the customer behavior. You also now have to, and what we have done is to enrich our Department of Data Analytics team, data scientists that are purely focusing on customer behavior, behavioral economics, which kind of channel is appropriate for which customer. And the process, then you have to also create ways of developing the products, where we still have the focus group conversations. We create prototypes, push it out to the customer. They're able to tell us, give us feedback about the customer experience, and we're able to use that kind of information to keep improving on a product. If today we were to isolate a particular product, which is the lending component, which significantly we have done a lot of disbursement on it. Today we are doing about $370 million on that platform in terms of disbursement year in, year out. And now the number is approaching $400 million. Now, what you find is that the repayment habits of the customer, you have to touch into a lot of data analytics about the customer, and that helps us to continue refining our algorithms. And beyond those algorithms that managing the credit risk, we're also managing the AML risks that come with it. We're also managing the operational risks that come with it. And all that helps us to spill out any kind of tendencies of a customer that is spinning off the normal trends, and that has significantly helped us to manage. What we've also done in terms of as we continuously become a digital bank, we realize that we have to continuously manage the bank 24 hours a day. So we have partnered with the security organization centers that are global and have a follow the sun model, where 24/7 external and internal risks on transactions across our firewalls are monitored by the second every single time. So the bank is always on a high alert, and beyond that, then as much as customer information is also being circulated around, certifications of PSI, DSS are important to us as well, because our transactions are also not limited to mobile money. We also have card transactions, and but even as you do that, then capabilities that you create also have to as Anup was talking about, you have to realize your core competencies, and you create a platform where that you can open it up to the environment, because it's an interoperable model, that someone who has the capabilities of building a very good UI, UX for the customer, but you stick with the competencies and manage the risks internally, that helps you even get more information about the customer and de-risk the bank as you're doing, because those are partnerships that come along that help us to significantly manage the risk. So our journey is not yet over. It's continuously evolving. As we do that, we also realize that you have to also think about other products that, as you think about the demographics, the customer is not only limited to social products, financial products, but think about the social component, that they become sticky into the journey of as you keep evolving the customer.
Thank you very much. Fascinating. And amazing how much the financial industry is adopting the language and the competencies of the digital platforms that many of us who live in Western countries know not so much from finance, but from the big e-traders like Amazon, right? So it's pretty amazing. So these guys are hiring PhD statisticians for their analytics departments. Fascinating. Andrea, let's come a little closer here to, although equity, of course, is also an emerging player here in Tanzania, but Andrea, your organization has been here for, I believe, 10 years now, Access Bank. So maybe you share with us a little bit your journey. How is digitalization affecting you as what used to be a traditional microfinance institution focused on lending and deposit taking? And what kinds of, and I know you're very busily also evolving your own digital offering to your clients. What kinds of risks do you see evolving, and how do you deal with that? How do you think about that?
Thank you very much. Oops, sorry. Access Bank Tanzania is indeed, let's say, a more traditional player in the microfinance space. We were established in Tanzania in 2007, and we have grown to be a medium-sized bank in the market. Our strategy started venturing into digital in 2012, 2013, when we started implementing mobile banking and agent banking. And at the time, although nowadays like this type of alternative channels are pretty much a cliche in the financial ecospace, at the time the biggest example that we had to learn from was actually was from the MNOs and from Equity Bank, of course. And when we started, yeah, there weren't that many banks that they were doing, particularly agent banking in Tanzania. We are definitely, as Anu pointed before, like we are a player that plays in the MSME space, and definitely we are seeing like a bit of a squeeze and increased competition. On the one hand, we have the very big banks that are more and more through technology venturing into our space, and of course we have the fintech that are definitely challenging us on a daily basis. And how like I think like a bank like ours can survive and should strive is a bit more to find a more human approach to all of this. And what I'm trying to say is that there was a report that I found always inspiring and interesting that came out in 2015 from the Boston Consulting Group, which was called the Bionic Bank. And what this report said is that basically technology is as good as it basically is the pain of your customer doing the most basic things, the most basic transactions. But at the same time, you should unravel, through the use of technology, a much more face-time equivalent of your staff spent with your clients. And in a nutshell, I find myself in that statement because I think that human beings are driven by emotions. As much as we think that we are rational beings, I think at the end of the day we are driven by emotions. And as much as I love my Uber and my Amazon, I still love my local bookshop where I know that he knows me very well, and the suggestion that he gives me, the most advanced algorithm of Amazon will never give me. And I know that there is my driver here in Tanzania that no matter what time is my flight, even if it's at 3 a.m. in the morning, he will be there 20 minutes before that. And Uber will never deliver that. So I think that technology and the digital revolution definitely are important, and we need to venture into that. But I also think that we really need to keep focusing on the human touch, and this translates into customer care, knowing your customer. And of course, when it's fantastic when you manage millions and millions of customers and hundreds of millions of transactions. But how much will you really know your customers? And I think there will be a point in the future, not so distant, where and it's already happening, there will be a bit of backlash of customer being managed only through data. But anyway, that's my opinion. That's the vision that we have a bit of our bank. But in terms of the risk, of course, like when you deal with technology, we deal with this with all the risks as the big players, and being a smaller one, we need to manage to that. And the bottom line is that the first step is customer education, and customer education also translates in the way you manage your pricing, in the way your pricing is transparent to your customers, and how to use the service. But also we run a lot of initiatives. For example, now this week in Tanzania is Customer Care Week. We have decided after Customer Care Week to do Cybersecurity Week. So during the Customer Care Week, generally every institution in Tanzania runs a lot of forums and events targeting customers. And the next week we decided, okay, let's bandwagon, so to speak, with the Customer Care Week, and let's run also a series of events to educate our customers. We generally, being a smaller player, what we can manage to do, each and every transaction above a certain limit that our customer does, we monitor it, like basically somebody called the customers and verify that this transaction is, this person is actually the one making the transactions. And at first, customers were a bit annoyed about being called the time, but then eventually they appreciated a bit of the so-called human touch in dealing with them. We in Tanzania, I think we've seen quite a number of of both the good sides, but also there were also the downsides and the dark side of technology. Fraud does happen. Let's face it. It's part of life. It's part of human nature. So far, we've managed to solve each and every fraud occurrence that we had. But of course, there are always challenges ahead.
Thank you. We'll come back to both of you, because of course one of the questions is, so what's still the role for the traditional branch, and will the economics for traditional bankers, for the human touch, still work at all, right, given all the competition out there? Let me move to Grace, who represents the African Development Bank, the largest investor in development finance institution here on the continent. Vasuso Otiano Nyabo. I can at least say a few things in Luganda, so I may not shine with my Swahili, but my Luganda is a little better, okay? So would you share with us a little bit what is your role as an investor in this space and how you monitor responsible investment?
Yeah, sorry. Thank you very much. Good morning, everybody. I'm based in Nairobi, and I work with the Financial Sector Development Department of the bank. And we developed a strategy for financial inclusion in Africa. Quite ambitious. We think that by year 2020, more than 75% of the population in Africa should have access to a transaction account. And so how do we go about it? How do we invest? So we have two windows. Those of you who are not familiar with the bank, we have the private sector window and we have the public sector window. And we have a bit of grant funding, monies we mobilize from donors. So our approach is to look at the ecosystem. And that is supporting governments, first of all, to make sure that the right regulations are in place, supporting central banks to help them modernize infrastructure. And then we also try to, using other instruments, we can support the development of the relevant infrastructure. As you know, digitization, if you don't have efficient telecoms, you cannot drive mobile or any digital payments. The other level, again, is identification. So we support governments where necessary, and we use the ADB window in that respect. For example, recently we supported BCO to develop, first of all, to modernize the infrastructure across the several countries in that region. We helped them develop the regulatory framework, and underlying that, we also build capacity, a lot of financial literacy. And we hope at the end of the day, with that ground being developed, a lot will happen. And then beyond that, we also use our private sector window to catalyze the innovators, the fintechs. Recently, we put in place a venture fund in partnership with the European Union. And as I said, we have two windows. We have the private sector, where we normally go and invest in big companies. But there are situations where we cannot economically invest, especially in the small fintechs that are coming up. And we also need to, we recognize the need for innovation to drive this digital space. So we put in place a fund, we call it Boost Africa. And it's a combination of venture fund and TA. And what we do to ensure that the customer is actually impacted is to put in place a monitoring framework along with TA. So the Boost Africa will invest in the fintech firms, and at the same time, they will be supported. So they will be supported to ensure that their businesses are profitable, and in addition to that, the TA will help them to increase their outreach. So those are some of the instances where we have done private and But we also go ahead and do a lot of feasibility studies. We are going ahead country by country. We recognize that different countries are at different stages of development. You look at Kenya, 75% of the population have access to an account or a transaction account. In some countries, it's still behind. The governments are still struggling with embracing technology, embracing the need. So as we call ourselves to be neutral, we're neutral, or we are honest brokers. So we try to get lessons learned, let's say, from Kenya and transform them and transfer them to other countries. So we're doing a lot of work to support governments develop the relevant legal frameworks, the relevant policies, and we do support them with financing, of course. So we have, we've endeavored, and whenever we put our investments in any intermediary, we make sure that they're impactful, that there is social inclusion, and that also helps us in delivering our high-level agenda. At the bank level, we have what they call High Five, that is Feed Africa, Industrialize Africa, Light Africa, Integrate, and Quality of Life. So we think that this digitization and inclusion can actually be a bedrock for service delivery. For example, in terms of Feed Africa, we are looking at digital services as a mechanism to deliver, to help farmers access produce, to help farmers sell and receive services. We are looking at Power Africa. There are many ways you can have these electric off-grid services where digitization can actually help. We are looking at integration. We have a big project in East Africa where we actually supported, we're supporting 5 East African countries. Now South Sudan has joined. So what we are trying to do is develop country-level systems, help them with the policy rules and regulations for payment systems, and we hope that digitization will also come be an interface. So what we are doing is actually to build capacities for government, help them with infrastructure, help them with financial literacy. I mean, I can talk the whole day, but just briefly, that's what we've done in the bank.
Thank you. We believe in you. Many interesting points. Role of private sector. There's a whole discussion later on during the day on that with private sector investors, like IFC, but much more private than IFC because IFC is still owned by governments. You talked about the role of governments in terms of regulations, and there's another session on that. Third, digitization is not just a digitization of finance, it's a digitization of pretty much every aspect of our lives, including infrastructure, transportation, electricity generation, and all those things. So it sounds to me like you guys are taking a very holistic approach to that, and finance is only part of that whole evolving ecosystem. And in many of those areas, Africa is, again, to use the L word, leapfrogging the rest of the world. So it's all super interesting. Let me, because I already see we're in the red zone here, although I don't know, that seems to be a little early. It's almost, I don't know, even as a German, I'm impressed. Because you don't see this, but we have this flashing thing here which tells us that we're running out of time. So let me, and I do want to open it up to a few questions from the audience, but just to our practitioners here, I already alluded to this. So what is in the future, and I think you had a good point, Andrea, about the human touch, right? You called it the human touch. It's, I recently read a book about the mega trends, and that is one of them, is that in this world of digitization, most of us as consumers, as clients of digital platforms, we yearn for the human touch. We yearn for that human face, somebody who empathizes with us, not just a talking bot on the phone. And I still wonder, and maybe Michael, you can answer first. So, what is the role of the branch in your in an institution that is heavily digitizing, probably the one of the pathfinders in this space. What are you doing with your branches? Do you use them for social functions now, or for dance lessons, or?
Thanks, Martin. It's a good concern, and for us, as we digitize the retail space, we recognize that that's where the masses are, and as much as we are digitizing the access and also transactional part, we'll still use the branches for servicing. Customers will walk in and ask questions and all that. But even as we do that, given that we cut across the main sectors, all the sectors of lending and financial services, our branches now are significantly becoming more of advisory centers than anything else. And sales positioning for acquisition of other customers and all. But even as we also grow into the SME space, that level of space may not necessarily be highly digitized, because there has to be a touch and feel. And we were digitizing to create that ambience for the SME customer and the higher net worth customer who may want to come in and ask for additional kind of services that we require human touch. That's what our business is. But it's not limited to that, because as we digitize, we are partnering with people who are, say, e-commerce providers. One of the biggest challenges that we find e-commerce struggling is the last mile, the delivering to the last mile. And one of the partners that we are working with, we created our branches as service delivery points, where they become logistical centers that if today you want to, say, for example, you're buying something on Amazon, an address becomes a very critical piece. Now we geotag all our branches and they become a delivery point that you can be able to deliver your item there and you collect it there. Partnerships that we are having with Lighting Africa as well as significant places where we work with renewable energy solutions. So we create some part of our branches that becomes experiential centers that they can come and experience this kind of thing. But at the end of the day, they are our customers, but you're utilizing the same structure where there's still a touch and feel to explain, but in partnership with our people, with our branches and our branch staff, to ensure that they know that at the end of the day, there will be a transaction behind it, and there will be a customer who needs to acquire a particular kind of customer. So the branch becomes still central, but in terms of what they've been done in the past, you have to redefine their role, you have to redefine how they interact with the customer, but they will still have a big place in the higher value of transactions. So you still, as much as we've digitized about 97% of our transactions outside, by value, you still have about 50–40% of our transactions we still in the branch by value because of how the transactions are. So that's pretty much where I see the branch playing a role in.
Thank you. It's amazing how that fits with what Grace just said about the merging ecosystems, right? So here we use bank branches to deliver the equivalent of an Amazon package, for instance, which we know in the United States because you can now pick up your Amazon orders at Whole Foods, which is a supermarket. So secondly, you're working with the electric revolution in terms of solar generation in Africa. So that's amazing. Andrea, are you still planning to open branches?
Well, let's say that, let's put it this way. I think that nowadays in Tanzania, there aren't that many banks that are planning to open in branches. But, and for the time being, like I think for this year not, but definitely yes, probably next year and following. I think I just want to touch a point here, which is something that that also comes across, is that it seems that as you know, as we digitize, we kind of like push away customer from our branches, and then the branches become more either an experiential center or an SME center, which to me, like, we might make a mistake that, okay, if your level of income is of a certain level, then you can come to the branch. Whereas if you're poor, you use the which, I mean, like, what I'm trying to say here is that a lot of like the financial inclusion narrative for years has try to make branches open to customers, to make sure that the branch is an inviting place to customers. And I think we need to really strike a balance between finding a good balance between technology, but also still making sure that customers are actually welcome in the branches. I think there is a famous case study of a bank in the US, in the early 90s, that tried to push transactions to the ATM and increase therefore the prices in branches, and then people started, like, it had a huge backlash. And I think that's exactly one of the mistakes that we as players in this industry we might make, to say, okay, if your level of income is not adequate, you use the agent or use the mobile, whereas for branches we keep it for our higher end customers. And I think that should not be the case. I mean, I think that the branches still play a vital role. I think that a customer should always feel, no matter what, even if there are agents, if there is mobile, even there is whatever digital service is available, if there are bots talking to you, still you can come to the branch. You can still be open, and just making sure that, like, focusing on that experience in the branch. I think I still see a future for branches. I still see us opening more branches, and I don't see, like, a world which is like 100% just digital.
All right. This thing is really irritating. We're again down at 0 now. It's very effective, okay? Especially from my chair here, which I chose not because I knew it was there. I would have chosen a different one had I known. It's so we're down at 0 now, so it's countdown. Let me actually, I have at least 10 more questions here to our panelists, but let's just allow 2 questions from the audience, given that this is also supposed to be client focused here. Who has an urgent question to any one of us? Hopefully maybe a question that more than one could address.
Your countries. Is that? Oh. Yes. So is that? Well, it's really for the banks in the room. So yeah.
No. Okay, I'll take that. I think for us, because I'll put it in perspective. Equity Bank has about 12.5 million customers for traffic. Now, if you have to effectively serve them, then you have to be. It's a multi-pronged approach that you have to work with. And as much as we are digitizing the transactional phase, we are not pushing them away from the branch. They have the leeway. But the more you are able to create that platform that they can be able to do all transactions and answer the self-service conversations that they have with the bank, then there will be less and less need for them to come to the branch. But you have to make sure that the branch is very well equipped with all information, FAQs that are very clear in case a customer has this kind of experience they have. Now, the conversation you brought about the agent also becomes very critical for us. Today, we have about 35,000 agents across the country. The 35,000 customers, they become our contact points for our customer. The need for understanding that this is a customer who will interface at that point becomes very critical for us, because we have to continuously train them. So we have quarterly trainings for them on our products that they will come, that they can be able to understand, and have a dedicated line for them. Should our customer come and maybe what they're asking is off the curve, whatever they may not, they will have a very quick line. Someone will interact with them, and they're able to interface with the customer. And that is interfaced with the branch. All those agents are hubbed by the branch. They are owned by the branch. And the people who manage those particular agents must be trained, must effectively understand their products, that they can be able to go and train the customer. So it's always about contextualizing this, and also in relative terms, in terms of what are your strategies, what kind of customer base are you serving, and then all these channels become open to the customer. The customer is open to whatever they want to come to the branch, they want to go to the agent, they want to go to the mobile. All those platforms are available to them. So the agent is a very critical piece for us. Yep. And even the compensation model for them becomes very compelling for them to stick with us, because every single transaction, whether it's an account opening, cash out, cash in transaction, they get compensated for that. And now we're moving to the next level where they originate loans for us, but the decision-making process is not them, is backed by an algorithm in the bank, but they take care of documentation and acquisition of those documentation. And in the process, you de-risk, because most of these agents are kind of where I buy my everyday needs that I need. So that person is very well known to that shopkeeper or whoever, or the trader or the retailer, and it helps us to manage the risk as we go on.
Thank you. Andrea, you want to add?
I subscribe everything they just said, and I agree with it. Like, I think it's both. I mean, the balance is between the agents and the branch is very both. Of course, like, the agent still comes with a limited use case. So of course there are certain services that you still need a branch. But the agent is also a good balance, because the agent, why it works so well, because an agent in general is also a leader of his or her community where he lives in, and therefore there is this mutual trust that is established between the agent and its customers. So for limited use cases, the agent is fantastic, and again, we are pretty much in line with equity in terms of strategy of what the agents can do, and the agents is an amazing sales force. Actually, I bet it's the same for Equity Bank, if not more, but for us it has become our first sales force, even more than any of our staff. I still think, like, the need for branches, if it's just like, cash needs, agent is perfect. When you need a bit of more sophisticated financial advisory type of service, regardless of your income, come to the branch, and that I think is the best approach.
Thank you. Now, I don't want to get into trouble with sorry, I'm really going to have to follow this clock here, because otherwise I will get sanctioned by the organizers. One of the most important aspects of these types of meetings is that you all get a time to mix and mingle and talk to one another. In other words, to engage in our most human function, which is networking, right, and building social cohesion. So that's what's going to happen during the coffee break now. I just want to point out that these people are all available to talk. Grace, of course, represents the investor community, the kind of platform building community here holistically, so please seek her out. Anup has done with his group more research than anybody else on this new interface between the digital and the traditional financial service provision, and they have helped many organizations in the field to do well, and they are now researching also with real numbers what are some of the pitfalls. So please talk to him, and then of course we have the practitioner organizations. I think you're hopefully equally impressed as myself as to how astutely they're dealing with this. I have colleagues in my shop who severely question whether banks will still be around 50 years from now. I have a colleague who is our head of fintech who says that I and my friends and my investees are the walking dead. That's what he calls us, okay? We live in a world of fundamental shifts. Michael just pointed out that the vast majority of Kenyans are below 20 years of age. They are digital natives. They may or may not find any value in traditional banking, and that creates a fundamental question about our business models and our cost structures. And personally, I'm quite worried about that. As an investor, for instance, the returns on investing in banking organizations have significantly dropped because the returns of banking have dropped, partly because of de-risking and deleveraging and those kinds of things, but also partly because of the new competition on the fringes, especially in the space of consumer finance and payments. So we're in a super interesting world. I think several people here on the panel said it. What really should drive this is what benefits the client, the customer, and that's what I call the ethics of intent. So I want to remind all of us, I don't think I need to, but I think that should be the guiding light. I hope you'll all have a super interesting day, and I want to thank the panelists, and I'm sorry we had so little time. We can blame that clock there. And, sorry?
You
Oh, we were just given more time. Oh, that's like manna from heaven. Well, you see, you just need to complain enough, and good things will be given to you. So that means we actually do have time for more questions. I think, Laura, you
I'm Philippe Broll from PHB Development, and I have a question about the risk related to taxes. I'm based in Uganda, and we work hard during 5 years to open bulk payment to the smallholders, farmers, and with the 1% tax, now everything has gone down. So I'd like to have the panelists, their views about the risk related to new taxes, and it's interesting to hear from Equity, who has different position in the region, and also maybe AFDB about responsible finance for governments. Thank you very much.
Excellent question. Let's, if we may, let's add a couple more questions so that our panelists can write them down, and then it's a little bit more dynamic. Okay, they're way in the back.
In the opening statement, we heard about the people who are financially excluded at this point from the digital revolution. So if the two banks could speak to any strategies that they have to do more outreach in the rural areas and to narrow the gender gap, which I think has something to do with ownership, smartphone ownership, but also how you're dealing with feature phones and smartphones to address the gender gap.
Okay, thank you. Excellent question. Let's add one more here in the front.
Thank you very much. I'm Joseph Carasso. I'm from Citibank, Tanzania. And comment on a question. First of all, to acknowledge the fact that the regulatory environment in Tanzania has always been very ahead when it comes down to technologies involving the financial sector. Tanzania was actually the first country, as far as I know, where mobile money really took off. And we've heard the Deputy Governor talking about so many new regulations that were brought in to further enable the payment system in the country. My question is, how do we reconcile the modernity and the way we handle data and the agility of the new technologies with the predicament of the regulator, which is to basically ensure safety, soundness, jurisdiction, local jurisdiction, local content. So I think this is something that we perhaps need to do a little bit more work to not only finding the solutions, but advocating for the technology and for the new solutions. Thank you.
Thank you. Excellent. Another very good question. So I would just invite now the panelists in any loose order, whoever wants to.
I'm happy to.
Okay, why don't we start with you, Andrea?
Good. So the first question, if I understand correctly, was the risk of new taxes and how we face that. I'm not sure about the situation in Uganda. I can speak about the situation in Tanzania. In Tanzania, in particular, when it comes to digital financial services, we never had, let's say, unforeseen taxes that would come along. I think, as also Joseph Carasso pointed, Tanzania, in terms, has been the regulator have done an incredible job in making sure that the framework is clear, that all the players are clear. So we have never seen, like, let's say, all of a sudden, oh, there is a new tax coming in. How do we deal with it, particularly when it comes to digital financial services? What we generally advise to our clients is, of course, like that they need to comply with the laws and the regulations of the country, and therefore paying taxes is part of their civic duty. But we're usually, like, again, I can speak about Tanzania, I don't know the other country, but generally also the players in the market, even if a new tax on any form of duty comes along, generally the players in the market are given ample time to consult with the government, to consult with the central bank, and to really, if there is any change, to make the preparatory steps to achieve the change. There's never been something that has emerged all of a sudden and completely unprepared. I think there was a question in the back which was very good. How do you target the financially excluded, and how do you balance between the rural areas and the gender? And at the same time, you work on the customer experience. I think that's still one of the biggest challenges that we need to address. I think that there is a bit of like a chicken and egg dilemma, which is like, on the one hand, for example, a lot of the digital financial services of today are still run on the very basic USSD interface, which has been great for the past decade, but the customer experience has been pretty much the same, which also means that most of the people were trained on the usage of this interface, and they were able to use it, but there are still a lot of people that face difficulties. I see a lot of our clients that are very much focused on maybe one transaction, one use case, and they know how to do that, but they never venture into any other number in the menu. No? They know the number 5 is transfer, then they choose M-Pesa, fine. They send to M-Pesa, and then they never venture into any other functionality, because the USSD case it's very let's say painful. The upside would be to make smartphones widely available and internet coverage widely available, and then of course having applications that are not only good in terms of customer experience, but they can come with support in terms of like voice support, in terms of educational support, and so forth and so on. But then the other side of it is that I think that nowadays internet coverage and smartphone costs are not the issue. I think that, again, speaking about Tanzania, internet coverage is widely available. The telcos have done a fantastic job in making sure that it is available. Smartphone prices are fairly low, but the problem is that on average, like a smartphone, how long does it last? I would say 1 day, 2 days at best. And this is exactly the same problem that our customers facing, is the lack of electricity. So we have a lot of like PayGo or solar providers that are emerging, but until we bridge that gap in the availability of electricity, that then would make sure that whatever device you own can be charged, it will still be a challenge to target the rural areas. And again, in Tanzania, like you can go to a very rural area and have fantastic 3G connection. So internet coverage is not the problem. It's really like the availability of power. The last question was on the regulatory environment and how do you balance between local jurisdiction and I think, Joseph, if I understand your question correctly, is pretty much about how do you balance between the protection of the data, keeping the data locally to comply with local regulations vis-a-vis clouds. I assume your question was along that line. And I think it is indeed sometimes difficult and sometimes it requires a lot of investment, but I still understand why the regulator would want, for example, to have the locally sorry,
No, it's fine. If I may, it's a fascinating question, and there's a whole panel on it later on today. So okay. Maybe in the interest of, we're blinking again. Time, how about the other panelists? Grace, do you want to add anything to the questions?
I think there was a question about responsible financing for government. It is not clear, did you mean that how we responsibly finance government, or how we translate the investment in such a way that it benefits the consumer or the end beneficiary? The other question on taxation, I think it's a challenge because it's a balancing act between revenue mobilization and ensuring that financial inclusion is actually promoted in that particular country. I happen to be Ugandan, and I can sympathize because you are trying to balance your budget, and this is a very narrow tax base, and digital payments are thriving. So I think they looked at a low-hanging fruit and they decided let's utilize this. But it's where it is taxed and at what level it is applied. I'm not a tax expert, but I think there's need for more dialogue with government to see how, or maybe to make it gradual so that the lower, the bottom of the pyramid is not affected. You're able to, because at the same time, I don't know whether the charges are actually attractive. Are the mobile operators charging in a way to demonstrate that they're actually supporting the poor? So that's a question for, a discussion for another day, and I think it is huge. And as I said, government is also trying to mobilize revenue. So it has to be a balancing act. In as far as responsible financing is concerned, we have systems in place, and we don't take things for granted. So we do recognize that the financial management or procurement services are weak. We go into support. We are not judgmental, or we don't just criticize, or we don't. So we go in knowing their weaknesses, and we provide support. So we work along with government to ensure that whatever financing we put in is actually benefiting the bottom, or our intended beneficiary. So we have a whole system, and we have, as I said, we have different instruments that support government to build systems of governance. It's not easy, but it's a long way to go, and we've succeeded in some places and failed in some. Yeah.
Thank you. Michael, what is Equity Bank doing to bank the still excluded? That was the question there in the back. What do we do about women? What do we do about rural? What do we do about people who don't have smartphones?
I think one of the things I mentioned earlier in the presentation is that we have adopted cross-functional technologies that allows us that scalability even in the rural setup. We're the only bank right now that has a 2G network for our mobile banking. So as opposed to the USSD sessions that you have that time you off because of the 180 seconds requirement, then you have a stickiness within the SIM card that allows you to extend the conversation of even the financial service that you want. So the 2G network allows us cutting across the country that you're able to access the product wherever they are. And it may not be centric to agenda because the access is with everyone, as long as they have a mobile phone, whether it's a feature phone. That capability is there, so that even that particular session that one takes, because then it deals with the issues of literacy. Someone may not be as very fast to do it as opposed to USSD session. You have to go very quickly. That allows you that case. Now, one of the things we've also helped within the 2G network that we have is to embed financial literacy capabilities within it. So even addressing that awareness of taking up a particular product, so you have sessions within that technology that educates you on saving, budgeting, and even as you're taking up the particular portfolio of products, then you are adequately advised in terms of what you do. It has allowed us even to do partnerships like with Arifu, where we also educate you on the journey of a product, like say for a mobile loan. It gives you a scenario of a person who is operating an enterprise. They have this financial need. How do you go about it? Why should you borrow for this kind of note? So it allows you those scalability of doing it. So that technology has helped us to deal with that scalability of the business, even the rural setup.
Thank you. Anup?
Yeah, so just to add to this, I think as much as financial capability is important, I think the whole app design that is being done on smartphones, it is always kept, when you are designing it, the focus is a middle income literate person. It is never designed for the poor. It is never designed for the oral and illiterate people. So we did some work in India, and we then replicated in several other Southeast Asian countries as well, where we looked at designing the wireframe from the perspective of the user, and we saw that the user would like to see. So, and we have very traditional ways of thinking, a piggy bank means that you save. But when we actually took those designs then and icons to people, they said, no, this doesn't resonate with me. In different contexts, different things resonate. Just to bring one more example, we worked with UNCDF in one of the refugee camps here in Tanzania, where one of the focus was to how do we build financial capability around mobile money and how to save and so on and so forth. We did pilot 3 aspects. So one was where a very one-on-one training was provided to the refugees. The second one where we used Arifu SMS-based, conversational SMS-based financial capability. And third one was where we worked with Foundation Capital to design the animations and so on and so forth. There, within digital technology, there are the likes of Arifu and Foundation, what they are offering, it makes a lot of sense to embed that as part of the product delivery. So it's not about smartphone, or it's not about the app design. It's about first building people's confidence to be able to use mobile money and digital products, and then letting them use those products and services.
Thank you. So now I think this is now the 4th time that we've reached 0 here. I'm very grateful for this. Feels a little bit like sitting in the space shuttle. I want to thank every panelist, Grace, Anup, Michael, and Andrea, for their contributions. I think you've all realized there's a huge amount of experience and familiarity with what's going on right now as we speak. It's probably the most exciting time to be in the business of financial access and inclusion ever, because we're finally literally scaling up to the millions, and possibly, as Grace said, to a point where the vast majority of this continent will be banked. And at the same time, we must do it in a responsible way and in a way that benefits our customers. I just read that in 1906, only 20% of the cars that existed at the time were combustion engine cars. All the others were, oops, very good. So somebody now told us it's a hard stop. Let me just finish the car story while I have your attention, because I think it's fascinating. Back then, the majority of cars were electric vehicles. And then the combustion engine took over because some Germans invented it and thought it was a great idea. And now we're coming back to the electric vehicle, which of course has way lower emissions. So let's make sure our financial inclusion industry is like the electric car and benefits the customers and our global ecosystem. Thank you so much, and please enjoy your coffee outside.
Thank you, Martin. Thank you.